Welcome to the deep dive. You give us the massive pile of research, and well, we sort through it to bring you the essential insights you need. Today, we're taking a close look at the U.S. federal government shutdown that kicked off on October 1st, 2025. We're digging into the specific real-world consequences. And look, our goal here isn't really to get into the politics of who's blaming whom. It's more about understanding the tangible effects, who's actually getting paid, what systems are starting to buckle, and what this does to the economy's foundation. We've got everything from White House estimates to credit agency warnings here.
Yeah, and that distinction is really key. The root cause is pretty straightforward, right? Congress didn't pass the funding bills for fiscal year 2026. You've got these deep disagreements on things like healthcare subsidies, overall spending, foreign aid, the usual suspects, really. But the fallout, that's complex. So I think the first thing we need to do is draw a line between those so-called non-essential functions that get paused and the essential services that are protected and generally keep running. Because the real damage, as we'll probably discuss, isn't always just seeing a closed national park sign. It's often the less visible stuff, the hit to confidence, the data gaps.
Okay, that makes sense. So let's start there. What doesn't shut down immediately? What critical things keep going, giving us, I guess, a bit of a buffer?
Right. Well, the big safety nets are usually protected. Think Social Security checks, SSI, that's supplemental security income, and also Medicare and Medicaid payments. Our sources confirm these keep flowing because their funding is mandatory, it's set by law, not really part of that annual fight over discretionary spending. Plus, you have some agencies or parts of agencies that have other funding sources, maybe fees they collect, so they can sometimes stay partly open too.
Okay, so millions relying on those checks have some breathing room, at least for now. But as soon as you move away from that mandatory spending, that's when things start to go dark.
That's generally when you see the closures hit. And the public often feels it first with things like the National Park Service. It's a classic example. Now, it's not always a total lockdown like we've seen in some past shutdowns. It varies. But it's definitely disruptive. You might find roads or trails open, these big outdoor spaces. But the buildings, visitor centers, restrooms, any gated areas, those often close right away. Which, isn't just annoying, it's a real loss of service.
Right, that physical inconvenience is one layer. But where does this start showing up as actual financial friction? When does the cost become something we can measure?
Yeah, it moves pretty quickly into measurable economic damage.
Right.
We looked at the White House projections,
Yeah.
and they're putting out a pretty stark warning. They're estimating the U.S. economy could lose something like $15 billion in GDP per week. For every week this shutdown continues.
Wow, 15 billion a week. That's a huge number.
Yeah.
Is that figure widely accepted, or is it more of a White House estimate, maybe with some political spin? How does it stack up against past shutdowns?
It is definitely an internal administration number.
Yeah.
Based on their models looking at past shutdowns and current conditions. But look, independent analysts generally agree the cost is significant, even if they quibble over the exact number. The real point isn't maybe the precise digit, but the way it happens, right? This kind of uncertainty, it just chills consumer confidence. Businesses pause investments. The whole economy kind of stalls. And that's real money, real activity just evaporating, not just delayed.
And then there's the immediate human cost, which feels very profound for federal workers themselves. You've got hundreds of thousands potentially furloughed, sent home without work. Or maybe even worse in some ways, essential folks who have to work but don't know when they'll get paid.
Exactly. Think about, say, an air traffic controller.
Yeah.
Huge responsibility, passenger safety on the line. And they're doing that job knowing their paycheck isn't coming. Their mortgages still do. Now, it's true that back pay usually gets approved later once things are resolved. That's important. It mitigates some long-term damage. But the immediate stress, the financial worry for essential safety people, that's intense and I think often underestimated. And we're seeing in the source materials, if this shutdown really drags on, some agencies are actually starting to plan for potential RIFs reductions in force. That's not temporary furlough anymore, that's permanent job loss.
Okay, so beyond the workers, what about critical services? Where do we see immediate hits to things that affect the public, especially vulnerable groups? Can you give us a couple of sharp examples?
Sure. Food and health safety is a big one. You see FDA and USDA food inspections getting curtailed. That can mean delays for imported foods, maybe slower approvals for new drugs or medical devices, and public health work like research at the CDC or NIH gets disrupted. The numbers are pretty stark. One source mentioned 41% of the entire workforce at HHS Health and Human Services is impacted by furloughs. 41%.
And those assistance programs, the ones that need constant federal operation, they could be at risk pretty quickly too, right?
That's right. Programs like WIC, that's the Women, Infants, and Children Nutrition Program, it helps millions of low-income families. It could run out of contingency funds or just be halted, and that directly impacts some of the most vulnerable people almost immediately.
And then you mentioned travel friction. We know TSA agents, air traffic controllers, they're essential, so they work. But unpaid.
Right? And working under that kind of stress,
Yeah.
it inevitably leads to slowdowns, maybe more sick calls. It just adds friction to the whole system. Meanwhile, other FAA work, like safety inspections, certifying new planes or maintenance procedures, that stuff slows way down too, which can cause delays down the line.
Okay, but speaking of pressure points, we saw something really interesting in the source materials. Reports that the administration might be freezing specific funds for state projects, citing this huge figure, $26 billion, supposedly aimed at states led by Democrats. Is that confirmed? And if so, how does that change things? It sounds less like a budget stalemate and more like, well, political hardball.
Yeah, that reporting definitely shifts the perspective. If accurate, it suggests the funding mechanism itself is being used as leverage, actively. It's not just a passive failure to agree on new money. It could be about withholding already planned funds based on politics.
Yeah.
And that really forces us to look beyond the immediate impacts like furloughs and think about these bigger systemic risks, to the financial system, to how government even functions. One of those systemic risks that really jumped out from the data is this idea of a market data blackout. It sounds dramatic, but the financial markets rely heavily on predictable government data.
Okay, break that down. What data are we talking about losing access to?
We're talking key economic reports, things like the monthly jobs numbers, updates to GDP figures, and maybe most importantly right now, the CPI, the Consumer Price Index, inflation data. Agencies like the Bureau of Labor Statistics, the Census Bureau, they rely on staff who are now furloughed. So those reports just stop coming out. And that means Wall Street investors, analysts, they're trying to figure out what's happening in the economy, maybe price assets, and they're suddenly missing crucial pieces of information, especially on inflation.
Right, so traders are basically flying blind.
Pretty much, yeah. They lose those reliable inputs, and that naturally fuels volatility because uncertainty goes way up. They have to guess or rely on less reliable private data.
And I imagine that uncertainty hits specific sectors really hard, companies that depend on government contracts, for instance.
Oh, absolutely. Think about defense contractors, big infrastructure firms, IT companies doing government work. They face payment delays, their cash flow gets squeezed, their stock price might take a hit. The government suddenly becomes an unreliable customer, which ripples through the private sector. If you pull the lens back even further, this connects directly to overall financial confidence. And even the risks around U.S. debt. You've got the big credit rating agencies, Moody's, S&P, Fitch, they're already making noise, warning that this kind of prolonged gridlock could actually hurt the U.S. credit rating.
Is that a credible threat, or is it something they say every time there's a budget fight?
I think it's becoming more credible, especially with repeated shutdowns. It's not just a theoretical warning anymore. A downgrade, even a small one, makes borrowing more expensive for the entire country. Investors might start demanding a higher interest rate, a higher yield on new Treasury bonds if they see the U.S. government is politically unstable or dysfunctional.
Yeah.
And ultimately, that means taxpayers foot the bill for that higher borrowing cost, just because of political deadlock.
And then you have the legal and regulatory side slowing down. We know things like immigration processing, visas, that gets backed up.
Definitely. Federal courts usually stay open for a while, using reserve funds, but even they face slowdowns if a shutdown lasts weeks. And crucially, think about the big regulatory bodies. Yeah, the SEC watching the markets, the EPA, environmental protection, the IRS handling taxes. They all operate at sharply reduced capacity. So what does that mean? Well, maybe important market investigations slow down. Environmental enforcement actions get paused. Tax audits and processing get delayed. It creates these blind spots, these gaps in oversight that could take months to clear, even after the government reopens.
And the last big systemic piece seems to be how this looks to the rest of the world, international perception.
Yeah, that's a big one. Allies, rivals, trading partners, they all watch these shutdowns, and they see it as a sign of, frankly, dysfunction. Instability. It really weakens the U.S. position on the world stage. How can the U.S. credibly push other countries on responsible financial management when it struggles to even pass its own budget? It undermines that authority.
Okay, it all sounds incredibly disruptive, potentially quite damaging long term. But what stops it from just spiraling into complete chaos? Is there any kind of, I don't know, silver lining or built-in break?
Well, the main forcing mechanism, as it's sometimes called, is the sheer pain and disruption itself. That $15 billion a week estimate, the furloughed workers, the public seeing services cut off, the market jitters, eventually the pressure usually becomes too intense for Congress not to act. Even if
Yeah.
the first step is just a temporary fix, like a continuing resolution or a CR, that just keeps funding going at the old levels while they continue to argue. But it gets the government reopened by some time. The disruption itself forces some kind of resolution, usually.
So the political pain eventually forces a temporary truce, at least. We also saw in the notes that some budget hawks make a philosophical argument here, right? That maybe these shutdowns, painful as they are, force a kind of reckoning, making government really prioritize what's essential, trim waste.
That argument is definitely out there, yeah, that it forces a hard look at priorities. And you also see adaptation happening outside the federal government. States, nonprofits, community groups, they often step up contingency plans. Food banks prepare for more demand. States might find temporary funds. It helps buffer the worst effects, stops total collapse in some areas. But, it also just shifts the burden onto state and local budgets, which isn't really fair or sustainable long term.
Okay, so wrapping this up for you, the listener, this shutdown, it's fundamentally a political tactic and a high-stakes budget fight, but it comes at a really steep cost. It's not just the lost GDP or the paychecks for workers, it's also about hits to regulatory stability, market confidence, and even America's standing in the world.
Yeah, what's really striking is that even while those truly essential services like Social Security keep running because of how they're funded, the deeper damage might be in that loss of predictability, the rise in perceived political risk. And you see that reflected immediately in those warnings from credit agencies or the way markets react when critical data like the CPI suddenly disappears.
So, given that we see these shutdowns repeatedly undermining U.S. credibility internationally and potentially raising borrowing costs here at home, the final question we want to leave you with is this. How many times can this happen before that temporary damage starts to feel more like a permanent structural risk to the U.S. financial system and its global standing? What should you keep an eye on next? Probably the duration. How long does this one last? How much volatility hits the markets when key data points are missed? And will we see more reports of those executive actions like freezing state funds? Lots to think about. We'll leave it there for this deep dive. Thanks for joining us.